What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And yes, I'm fighting a bug. So I just wanted to let you know that I still am positive with my overall dividend portfolio. Now, a lot of people have been posting asking about this and this. That's like borderline financial advice. So I'm not going to go down that gray area. But I'm just going to let you know I am in the positive for my high yield dividend portfolio. My growth portfolio is doing fine. My IRA is doing fine. So I'm in the positive there. I'm just squeaking by right now for my high yield dividend portfolio. And of course, eventually that will go back up to big numbers. So not too worried. Even if I'm in the negative, I will go back up. I have gone up numerous times. I've done well against the S&P 500 at times, so not too worried. And the dividend growers, and I'm buying, a lot of them have beaten the S&P 500. So there are 3 dividend ETFs that I absolutely love. Now, yes, the weekly pay ETFs are getting crushed. Now we need to start looking at reliability. As I told you before, reliability is the most important thing. These 3 ETFs I have in my portfolio, I will be buying. I put $250 in my section that I told you before, and these 3 I'm targeting. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 3 dividend ETFs right now. First one I want to go over is the first Trust BuyWrite Income ETF, sitting at $23.59. This one's pretty attractive, and again, since inception, it's done pretty well. So here's the numbers right here. In 2015, it was right here at $19.99, and it still is up, and it did recover from the pandemic. Man, this is a buying opportunity when this is rock bottom right down here. What was that lowest point? 16 right over there. So this is a good buying opportunity, and I'm going to be buying it. So we're going to go over some really good things about the First Trust BuyWrite Income ETF. So the first thing, the fund's primary investment objective is to provide current income. The fund's secondary investment objective is to provide capital appreciation. So that's one thing that's very nice. The fund will pursue its objectives by investing in equity securities based on U.S. exchanges of all market capitalizations and by utilizing an option strategy consisting of writing, it says in parentheses, selling U.S. exchange-traded cover call options on the S&P's 500 index. So it's rated as a 4-star right here. That's not bad. Okay, so we have some good things right there. All right, so right here, the expense ratio is 0.76%, so be aware of that. Now, it's high with information technology, financials, consumer discretionary, industrials, healthcare, and communication services. 32.02% in information technology. So if you put in 10K since inception, right here, on January 6, 2014, you would be at $24,409.46. So the NAV, okay, not too bad, 10 years. Since inception, 7.59%. Now, I want to go over a few things. Okay, now this looks good. 4-star. There's some things that we also need to go over. Over time, the numbers are actually increasing, so I like this. 2022, we have 15 cents, 17 cents, and then in 2022, 13 cents, 14 cents, 15 cents. Then it cracks 16 cents in 2024, and then it cracks 17 cents in 2025. And then it was down a little bit, and then it's back up. So there is a little bit of growth. Now, again, this is a BuyWrite ETF. 8.72% dividend yield. So you are seeing some appreciation that it focuses on. So that's one thing that's attractive for me long-term wise versus the instant gratification of the weekly pay ETFs. As I showed you before, they have been getting hit hard, and they're not the most reliable. Let's jump to the next ETF. This is one that's very attractive as well, the Kurv Technology Titan Select ETF. It's sitting at 2660. So since inception, it's done pretty well. It's actually in the positive. So it's up 10.14% since inception. So numbers look good. That's what I like about it. And let's check out some trends and some information. So you have to be aware of the 1.12 expense ratio. So here's some benefits. Removing non-technology companies helps to gain pure exposure to the top technology growth stocks through smart security selection. Okay? That to seek maximum growth, names are weighted based on momentum signals. So that's another thing. Writing cover calls seeks to generate income on a stock with a limited upside potential or low price momentum, which can also serve as a potential downside mitigation. So right here, the objective and strategy is to seek maximize total return by actively managing a portfolio with concentrated exposure to high conviction technology titans, while at the same time generating potentially tax efficient income. So these are good growers. These are good growth stocks. Alphabet, GOOGL, that's 14.31% of the fund. Amazon is 10.31%. Broadcom is 7.03%. Apple is 5.77%. Meta Platforms is 5.66%. Now, AMD is 3.81%. They had some recent earnings that were very good. Now, Intel's struggling a little bit. Hopefully, over time, they will be a juggernaut. Hopefully, they build that plant in Columbus. That would be nice. Let's jump to the final dividend ETF. Now, the final dividend ETF is QDVO, sitting at 2842. This is one of my favorite growth and income ETFs, and I'm going to jump to it. It has growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. Has an expense ratio of 0.56%. So the equity exposure and lower volatility is important as well. Covered calls and dividends may help reduce volatility versus the overall market during times of broad-based market declines. Do you see this right here? This middle one is very important, and this is when the market takes a hit. I feel confident with this one. Active management. It allows the portfolio manager to identify opportunities and risks and act on all those decisions in real time. So it has a portfolio of large cap growth equities with historically strong earnings and cash flow characteristics. That's one thing that I like. Now, again, the distribution is 24 cents. If you look at 2025, when the market was good and then the market took a hit, guess what? It's coming right back up. So that's one thing that I like about this. Again, look, 15 cents, 16 cents, jumping back up to the 20s. And right now at 24 cents. So a distribution rate of 10.18%, and it's monthly. And its goal is to grow in distribution, is what they said before. So they have some very good holdings, which I'll jump to. Their holdings, their top 10 holdings: NVIDIA, Apple, Microsoft, Alphabet, Amazon, Meta Platforms, Tesla, Broadcom, Visa, and AMD. Very strong top 10 holdings. So I just wanted to go over these three. These are three that I've been buying, and I've been getting some pretty decent distribution from them. I'm going to continue to buy these ETFs. And again, weekly pay ETFs are not the most reliable. Now look what happened with the market. HOOW is taking a significant hit. But guess what? These ones are looking pretty good right now. So they appear to be in pretty decent shape as compared to these weekly pay ETFs that are taking a beating. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze in a video for you tomorrow. And by the way, don't use my YouTube channel for financial advice or tax advice. I have a disclaimer way at the beginning of the channel, and I tried to wing this with a cold. So you guys take care and have a great Dividend Warrior Wednesday.